Income Tax 2020. Self-Employed Business Schedule C Introduction. Come in, relax with Income Tax 2020. Self-Employed Business Sole Proprietorship Schedule C Introduction. With regards to the income tax equation, we are basically up top again in the income line item. However, the sole proprietorship is a little bit more complex than other items that would be included in income, such as W-2 type income. We're going to have a separate schedule of the Schedule C. Remember that this income tax equation basically mirrors the 1040 in essence, and then we can have other documentations or other forms that would then feed into it. In this case, the other form is quite large and quite extensive and actually includes other expenses on it, which means that although we're not talking about expenses that will be on the first page of the 1040, such as the above the line deductions or the below the line deductions for standard and itemized, primarily when we're talking about a Schedule C, there are basically expenses on the Schedule C. We basically have a whole nother income statement. In other words, remember that the first half of this equation here is basically a modified income statement, that part of the 1040, the first page of the 1040 in essence. But the Schedule C is a whole income statement in and of itself, and we're not basically bringing the gross income into line up top into the income line. We're taking the gross income on the Schedule C, subtracting all the expenses, which are basically deductions, but they're business deductions, to get to the bottom line, similar to net income on the Schedule C. That net income then pulls through to the income line item on basically the 1040 or the top of our income equation. So it's a little bit more complex to think about because all the expenses, once again, on Schedule C on the income statement for the business are basically business expenses. In this presentation, we're going to do a quick rundown, a quick overview of all the different areas that a Schedule C can touch on, all the different impacts that a Schedule C can have in different areas of the tax preparation. It can make the tax return more confusing, and that's going to lead into just the idea of if you're starting your own business and you're doing tax preparation, you want to decide where your focus will be. Are you focusing in on doing more basic type of tax returns and you're going to be getting a lower profit margin per return, but you have a system to crank them out well and can do a higher volume of returns? Or are you focused in on higher income returns, most likely, which are most likely more difficult returns, in which you will have higher gross profit? You're going to make more per return, most likely, but you're going to be able to do less returns due to the complexity that's going to be involved there. So you want to kind of know what that is, or where your firm is, or where you are in the firm in terms of where your concentration should be, so that you know which clients you want to take up and which clients you would rather not take up. And it could be difficult to do that when you're running your own business, because oftentimes you're saying, hey, I would like to do anything. I can do any kind of return I want, or even just like practice your skill level in terms of different returns. But there's a difference between, just being able to do whatever return is good and the return that fits in well to your business model. So, and it can be difficult to turn down, say, returns, or when a return gets somewhat complex or past the level of complexity that is within your business model, to ask the client or to recommend the client possibly somewhere else. But if you have a good network of people to be able to do that, other professionals that have their specializations, then you're going to want to do that, because that's going to help you to streamline your business for your business model type of needs. So I just want to point this out because the Schedule C is an area that starts to lead to more complexity. You can have pretty basic Schedule Cs that you could pick up fairly without too much difficulty, but the Schedule Cs can get somewhat difficult. And when you start talking about Schedule Es, and especially if you have preparation for like S corporations and partnerships that then flow through to actually do those returns, those like business returns, can add a substantial level of complexity. And again, you want to think, is this where I want to focus? Is that where my focus is? Not just with regards to could I do it if I figured it out, but is it within my business model to do it? I mean, is that what I'm doing to make money? Okay, so here is our full 1040 with the information up top, and then basically the start to our calculation, our tax calculation down below on line 1. Let's focus in on that calculation down below. We have the income up top, or the income section up top. So we don't have the W-2 income. We have the income down here from the Schedule C that's flowing through to the first page of the 1040. That's where this 100,000 is coming from. It's going to be coming from then also the Schedule 1 and ultimately from the Schedule C. That's going to be our total income. We also have an adjustment to income. That's our above the line type of deduction. That is also related to our Schedule C. So we'll see that shortly. And then we have the 92,935 in this example, that being the adjusted gross income. Standard deduction, that's because they're single. This is going to be the single standard deduction here. So nothing really different with regards to the standard deduction at this point between a Schedule C business and a W-2 type of income. But then we have this qualified business income deduction, which could be a factor and a large factor that you want to be considering within the calculation or as part of adding a Schedule C potentially. And then we're adding these together. We're at the 28,507, and that's going to give us then the taxable income, the 64,428. Now, if we look at Schedule 1, Part 1, meaning the top half of the Schedule 1, that's where the 100,000 is feeding into. It's coming from the Schedule C. When we add this up, then that's going to be pulling forward, and that's where this 100,000 is coming from in the first page of the 1040. We'll see this again in the tax software in a future presentation, so we'll go through some of these links in the software which might make it a little bit more clear. Obviously, the software helps to have all these links that we'll be pulling together, but we need to understand them so that we can explain them and notice if something is going wrong. Now, this is the second page of the Form 1040, and I just want to point this out now because this is another endpoint within the 1040 that's affected by the Schedule C, and that's going to be with the other taxes, the other tax typically being here, this self-employment tax. So when you have a Schedule C type of business, you have to calculate not only the income tax, which is what you typically will do with any kind of income. If it was W-2 income, you're still going to be calculate the federal income tax, but you will also have to add the calculation for the self-employment tax, which is Social Security and Medicare, similar to the payroll taxes that would be on a W-2, which would be calculated by the employer and then put on the W-2 and basically done for us if they were a W-2 earner that would be taken care of in essence by the employer. If we're sole proprietorship, then we have the self-employment tax, and we basically have to do that as we do the tax return. So if we could then go to the Schedule C, this is what the Schedule C looks like in total. We've got Part 1 and then Part 2. That's going to be basically the income and expense line items. That's going to be the major two parts of it. We'll get into the whole thing in more detail. The first part, of course, the up top is the information related to the business. So you got the business information, what's going to be their accounting method, Part 1 and then Part 2. Part 1 and Part 2, of course, are basically the income statement. So Part 1 then is the income. In our case, we have the 125,000. So now we have income, and then we have the expenses basically in Part 2. Now note that the expenses are in essence deductions. These are deductions not on the first page or not on the 1040 directly, but they're expenses. They're things that we consumed in order to help to generate revenue, which is a deduction. They're deducted on the Schedule C as part of the income calculation or the net income calculation. And then we basically get the net income here, which is at 100,000. So that's the bottom line of the income statement specifically related to the Schedule C. That net income, not the gross income, but the net income on the Schedule C is what's going to go into the income line on the first page of the 1040. So it's rolling into kind of like the income section on the first page of the 1040, even though we already took out the deductions here in the Schedule C. So in the Schedule C, we have deductions, and then the net income rolls into basically kind of like gross income for the 1040 tax calculation, where we apply the above the line and then the below the line deductions at that point. So this is going to be the third part, which is the cost of goods sold calculation. This would only be applicable if you're dealing with inventory. And then we have the information on your vehicle as well. And then we have the other expenses. These other expenses are included in the expense line item. So that 25,000 in other expenses, then we break out with another schedule here, and this will give us what the other expenses were. Okay, so then we have the self-employment tax. This is Schedule SE that we have to include as well. I'm not going to go over the full calculation for it, but in essence, these are the other two federal taxes that you got to deal with when you're self-employed. In other words, if you were an employee, a W-2 employee, then the employer is forced to be the one that takes care of calculating and taking from you directly before you get the money your Social Security and your Medicare, your payroll taxes. And then the employer is also responsible for matching the employer and Medicare and paying it out of their pocket. So half of it comes out from you and half of it goes from the employer. Well, with regards to a Schedule C business, the IRS basically thinks of you as both the employee and employer. even if you don't have any employees, they think of you as basically, the employee of the business, and therefore you should be paying Social Security and Medicare, they think. And then you should also be paying the employer portion of Social Security and Medicare. So that's basically what's happening here. They're doing a calculation to pay basically like the equivalent of the payroll taxes as if you were the employer and employee of your sole proprietor type of business. It's going to be calculated then on the net income. We'll go into that in a bit more detail in a future presentation, but the calculation here, we get down to the actual tax, which is the 14,129. So that would be the tax that was calculated. That's going to be on page 2 of the 1040, adding to the federal income tax that we had. However, once again, they're trying to kind of match what would happen on like a C corporation, where the employer pays half of it and the employee got paid half of it by the employer taking it out of their wages. But in that situation, they also get to deduct the amount that was paid, right? They get to deduct the employee portion because they're an employee, and they also get to deduct the amount that was taken out of the employer portion as an expense. So basically, if we're trying to make this equivalent to what would happen in a Schedule C business, we should be able to deduct half of it. So we got to pay the whole thing. The 14,129 in this case is what it calculated to, but half of it should be deductible if we're trying to mirror what would happen in like an employee-employer situation for a C corporation. So we should be able to deduct half of that. Now, we can't take that deduction on the Schedule C because that would create like a circle loop reference, because we calculated the tax based on the net income on the Schedule C. And if we deduct this on the Schedule C, that's going to affect the amount of tax that we calculated on the Schedule C. And right, you got this circle loop reference that you might see in Excel when you have that circle loop. So they got to deduct it somewhere else. So this is going to be pulling then through to an above the line deduction, a Schedule 1 deduction. So these will have an impact then. So then if we go to Schedule 2, Schedule 2 is showing the calculation of the 14,129. That's the self-employment tax that's going to be included on page 2 of the 1040, added to the federal income tax. And so we see that here. So this is page 2 of the 1040. So this was the federal income tax, and now we have the 14,129 self-employment tax as well, which is obviously a significant increase to self-employed businesses, and also often a source of pain when they do their taxes and have to deal with that because it can be a little confusing. And then on the adjustments to income, we have the deductible part of the self-employment tax. So that the half that we get to deduct, meaning this is the full amount that we have to pay, but then we get to deduct half of it for federal income tax purposes, right? So this is going to be the half we get to deduct for federal income tax purposes on the adjustments to income. That then flowing forward to the first page of the 1040, that's where that 7,065 comes from. So if we're back to the 1040 now, we had the Schedule C that rolled into the Schedule 1, that income rolled in here to that 100,000. Then we had the self-employment tax, which was twice this amount that's going to be on page 2. We're going to pay the tax for self-employment tax, but we get half of it as a deduction, 7,000 for federal income tax purposes. There's the 7,065. That's coming from Schedule 1, Part 2. That's going to get us to the adjusted gross income. We then have the standard deduction, 12,400, and then we have the qualified business income deduction, which may be applicable depending on the type of business. So this is going to be another impact that will be affected based on the Schedule C. Software will be helpful to help us to determine the amount of the qualified business deduction, which of course is significant here as well. And then we have the taxable income at the $24,028. This is the first page of the 1040. On the second page of the 1040, we have the federal income tax that is now being calculated based on, of course, this 64,428. But we also have the other tax, that 14,129, Social Security and Medicare self-employment tax, which was calculated basically on the net income of the Schedule C to get us to the total tax. So these are the types of things that are, you can see there's kind of a lot of things that are impacted by basically a Schedule C. So it's not too bad if you have the software, but the Schedule C can open up the door to having a lot more things to be thinking about, and also be thinking about like estimated tax payments and potential planning for other types of things that may be deductible, like insurance and this kind of thing. or possibly setting up a self-employment, a SEP or something like that. So if you're doing businesses that they're being reliant on the business, as opposed to it just being like side work, like gig work, then it opens up a lot of other opportunities, but possibly again things that may be outside of what your focus is on. Meaning you could do planning at that point in time, which could be a significant impact, and you could get income planning and estimating the estimated payments, and doing that kind of, making reminders for the estimated payments and that kind of thing as well. So that's an opportunity, but again, it's also something that you want to be aware of and see if it fits in your business plan.